Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Monday, December 14th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Sunderland Group. Your success, our tradition. For more information, please visit www.sunderlandgroup.com. Now for today's headlines. Citigroup says it plans to repay the money it owes the U.S. government and will begin the repayment plan by issuing $17 billion of stock immediately. The move is largely motivated by the bank's desire to end the executive pay restrictions that came with the government funds. Meanwhile, the government plans to begin selling its roughly $30 billion of Citigroup shares and will end its agreement to guarantee a pool of approximately $250 billion of Citigroup assets against outsized losses. The government estimates a profit of between $13 billion and $14 billion on its investment in the bank. In investment news, regulators closed regional banks in 3 states late last week, bringing the total number of failed banks to 133 for the year, according to the Federal Deposit Insurance Corp, or FDIC. Banks in Florida, Kansas, and Arkansas were closed, bringing the total number of bank closures to its highest level since 1992, when 181 banks failed. An average of 11 banks have failed per month during 2009, causing the FDIC's Deposit Insurance Fund to fall into the negative for the first time since 1991. In fact, at the end of September, the fund was $8.2 billion in the hole, although that figure includes the $21.7 billion set aside for future bank failures. The fund will likely move back into the positive by 2012 as banks continue to repay their insurance premiums over the next 3 years. The record for bank closures occurred in 1989 when 534 banks were shut down during the savings and loan crisis. In sales and marketing news, a new survey reveals that agents and brokers trail many other professionals when it comes to the use of social media sites, such as Twitter and Facebook. The American Agent and Broker Survey found that 20% of agents and brokers are considering using social networking for marketing, but less than 1/4 of respondents currently do so. When asked whether their agency or brokerage had a social media presence, 58% said no, 22% said yes, and 19% said they were considering it. Meanwhile, of those who do take advantage of social media sites, 27% use LinkedIn, 15% use Facebook, 11% use Twitter, and 4% use MySpace. Even more surprising, while the 81% of respondents said their agency has a website, 19% said they had no web presence. Finally, the most popular marketing method used to reach current customers and prospects was email marketing at 49%, followed by search engine optimization at 25%, lead-based websites at 13%, interactive websites such as reader forums at 10%, and electronic customer relationship management at 8%. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.